friends, and welcome to the CUInsight Network. My name is Robbie Young. I'm the Vice President of Strategic Growth here at CUInsight, and it's my job on this show to have conversations with thought leaders who support the credit union community. We'll identify issues affecting credit unions and discuss best practices that help us learn from one another and strengthen our credit unions. My guest on today's show is Cisco Malpartida Smith, Managing Director of Strategic Advisory Services at SRM. Cisco, thanks so much for being here.
Thank you, Robbie, for having me.
Of course. So to jump right in, most of us didn't grow up thinking that we would get to work with credit unions. What did you want to be when you grew up?
Well, that's a great question. I was thinking, I had that moment when I was a young kid where I actually thought I might want to be president of the United States. I think I lost it at some point, and I kind of evolved to this idea of, well, maybe that looks like being an attorney or something. But then I realized I wanted people to like me, so that just wasn't going to work. So I think it was a journey.
Yeah, I totally understand that journey. So what was your journey like to get to your current role as Managing Director of Strategic Advisory Services at SRM?
Well, that's a fun one. I actually did, in college, end up becoming student body president at my university. And interestingly, there was this sort of cute story, and I'll give you the abbreviated one, but I wanted to make my university the best it could be. And I got introduced to this idea of an entirely student-operated credit union at Georgetown University. So it was a sister college to my Jesuit institution in Seattle. And well, that just set me off on this journey of trying to actually create, as a student, undergrad at my university, to create our own student-operated credit union from scratch. And believe it or not, I got 6 credit unions in the Seattle market to support it, and including BECU, the 4th largest credit union in the U.S., and they loved it so much, they ended up, I should have known better, but they ended up counter-offering me an opportunity just to sort of come to their organization as an $8 billion credit union and lead it across the state to all higher ed institutions. So that kind of got me into the credit union movement. I did really well there, moved on. The number 2 guy became CEO of a large credit union in Florida, and he asked me to be his chief strategic officer. So that kind of really got me on this journey of having some really great experiences. We were one of the first to launch ITMs when that just was coming onto the market. So I had 40 branches that I needed to figure out how to sort of transition from the historical sort of transaction centers to these relationship centers using this sort of bridge technology on the ITM, for example. And so did that. And then I've even gone off and worked at a number of large credit unions as their sort of internal strategist, including serving as CEO for 3 smaller credit unions. And even to this day, I'm actually serving as a fractional CEO for Tulane Loyola Federal Credit Union. So it's coincidentally a university-based credit union in New Orleans. I also serve as a chairman of the board for 2 university-based de novo startup student-run and operated credit unions. And so one of those is at George Washington University in D.C., and the other one is at Seattle University, where I'm also I guess I work as an adjunct professor in the business school, teaching students all about credit unions and letting them go through that process of chartering one. If you can't tell, I love this work, and I'm very passionate about credit unions.
Well, I can certainly tell. And from all that you said, it doesn't seem like there's enough hours in the day to do those things, but I respect it. I had the opportunity to attend the CEO Institute at the University of Pennsylvania, their Wharton School of Business, and we got to meet their student-run credit union there. So I know those student-run institutions are so powerful, but maybe the kids over at Wharton could use some of your help, because they did note that they couldn't in recent memory think of anybody who left their work at that student-run credit union and then got into credit unions afterwards. So that was a little disheartening to me. So maybe they could use some of the secret sauce you have over there.
Wow, you should see the smile on my face. Not to be off topic here, but I've gotten very close to Georgetown over the years. I'm not as close to them now because, think about it, they have a sort of a high turnover rate, but that's been very similar to their experience. In fact, when I first got introduced to them, their student leadership team, which is also their board of directors, which I've never really seen anywhere else. So the C-suite is the board. That group, the student chief marketing officer, just as an example, she kept referencing them as the bank on campus and their customers. And I kept thinking, gosh, like, do you not know, like, those are like sacrilegious words to us. We're not a bank. We do banking. We don't have customers. We have members. And I realized they're like the Lord of the Flies of credit unions. They're sort of like out on their island, and they've come up with their idea of what a credit union could be, but they didn't really have any real strong connections to the movement. So coincidentally, I happen to be the only real full-time professional working for a credit union that was sort of volunteering and helping them. But clearly, UPenn, which is the other one that still exists, could use a little bit of that secret sauce too. So good to know. I'll have to add that into the list of things to do when on my spare time is connect with those guys.
Well, I'm ready to help solve the problem when you need my help. So you just tag me in.
Love it, Robbie. Let's do it.
So could you tell me a little bit more about SRM and where and how they add value to credit unions?
Yeah, SRM does a variety of complex and I think very valuable services, from sourcing, vendor negotiations, technology integrations. And my namesake here is strategic advisory. And there are quite a few projects and strategies. There aren't really that many that we haven't been exposed to, but we can certainly lend, a vast amount of value towards any of these credit unions that are sort of dealing in those questions. In particular, though, I have a focus and strength around developing organic growth strategies. So there's sort of the growth paradigm, and there's inorganic, so the merger side, which we have a very strong team on. But there's also this idea of what are we doing on the organic side to grow the credit union? And that's really, I think, that should be a major component of every credit union's core strategies. What are we doing there, and being really clear there? So my role has essentially been that for all of those credit unions. I was actually the first employee officially at BECU. So that was the largest community credit union. And I was the first employee to then be hired to strategize around who, what, where, when, and how we were going to serve non-Boeing employees. We had just expanded our field of membership from the Boeing employees and their family members to now anyone who lived, worked, worshipped in the state of Washington. So that's great. Now you can serve everyone, but like, who are they? What are they? How are you going to do that? And so I was the first employee for the credit union to figure out those strategies. And it was just a lot of fun. So now, many years later under SRM, being able to share in those experiences and obviously taking a passion in that space and kind of paying attention to best practices nationwide, it's been just a pleasure, because all of these credit unions, small, medium, and large, are essentially still struggling with some of these same basics. And I think we can all just get a little bit better, stronger, faster.
I completely agree. So as the average age of credit union members continues to rise, why does this pose such a significant strategic risk, and what key indicators should leadership teams be monitoring most closely?
Fantastic question. The average member age, and we could also look at median age, is generally around 52 years old or older and rising. Think about it. Every single day, every single member gets a day older. So keeping that number in check is like fighting against a current that's just constant. It's just continuing to move in that direction. So let's take a moment just to think, like, why is that increasing member age a problem? Well, put very simply, as members age, they tend to save more and borrow less. But our credit unions, we're both a deposit and lending institution. So what happens if all of these members that are getting older tend to save more, and we really don't have a lot of the new borrowers come in? So we're a credit union, it's kind of like the scales of justice. If one, we want to be balanced in that, not have one side be lopsided to the other. And so that's what we're seeing. Actually, this is a serious actual problem for, I'm going to guess, but at least 50, maybe 60, 70% of credit unions are experiencing this exact phenomenon. And if we really roll that back, I think that kind of drives into a little bit of my point of, from a KPI perspective, a key performance indicator, we're not even really paying attention to that metric. We're looking at certainly a number of other metrics, capital ratio, like all these other ratios or metrics, but very few of us, less common, are we looking at what is our average age, median age, and then realizing, well, what are the ripple effects of that may be manifesting itself across our organization and members. So we definitely want to be thoughtful there because we certainly want to be able to offer high rates of return to our aging members. But how are we going to pay for that if we don't have the concurrent borrowers that generally we make most of our revenue off of? So I'd say this is probably one of the most undervalued KPIs that management teams, in my opinion, aren't paying attention to that should.
That's super interesting. What organic growth strategies, including operational or cultural shifts, have proven most effective in helping credit unions attract and retain younger members while maintaining those strong loyalty among the existing ones?
That's a really good question, and I don't know if we have enough time for it, but I'll say this. There are a number of proven examples I can share with you. I'd say my favorite strategy, and this is the one that I've ended up working on personally for, my last 25 years in the movement. And let me start by saying, think about how most credit unions have a very specific original seg. They may have been the credit union for factory workers, police officers, workers of some specific, let's say, military-based, whatever. The list goes on. But back then, it was a little easier to get our members from that employer because in many examples, it was the only or one of the only options that was either integrated or offered by that HR office at that seg. So, for example, very specifically, I'll use Boeing. At Boeing, if you wanted to even get paid, the HR office literally said, well, you could get a check, we're going to mail it to you, or if you want to get paid faster, you get an account with the credit union. Like, here's your Boeing employee's credit union account app. Like, go ahead and fill this out as part of your onboarding as a new employee. That's how integrated we were. But think about that. That really doesn't, if it's existing for a few credit unions, great, but that's not the norm. And so we really are competing against everyone because now direct deposit's available for any institution. We've had over 100 years to brand credit unions, federal credit unions. People still don't know really what that means. And so we're sort of fighting. People default into knowing what a bank is, but they still don't quite know what we are. And we had this natural pathway for that younger employee that was coming into a business or organization. And maybe they were older, but generally, that's the common, hire. And we'd be able to grow with them. And so we had this natural sort of balancing effect. Well, now that we don't have that, we're seeing that we've maintained that relationship with that bulk of those members, but they've all aged up and we've not been effective at attracting the younger members. So this strategy that I've ended up realizing is, think about this. In any market across the United States, we generally have a college, university, a bottleneck point, a literal manufacturing plant of young professionals that every 2 to 4 years, we have 100% turnover in that market. We don't really see this in any other example. I cannot think of another example that you have this like pipeline of young consumers that are entering their life stages of lending, that one day they go from this low income, underbanked, underserved consumer to now graduating with some kind of degree, some kind of advancement, and entering into the workforce. And if we can somehow, it's not the sort of idea of like laser bomb versus carpet bomb, like instead of shotgunning it and trying to market ourselves and compete, the biggest issue in competition is that the most profitable consumers in age demographic tend to be between 35 and 45. But I don't know about yourself, but I'm getting offers in the mail today from Chase in my local market offering me $900 to bring my accounts over to their organization and use them. That seems very compelling, right? That's a hard competition. That's maybe a little too expensive for us as most credit unions to sort of head-to-head compete with that. So the strategy is about going a little further upstream to these sources, these wells, these springs of these consumers that, yes, there may be some competition there, but it's generally an opportunity for us to connect with, and if we can do it well, we can develop a trust with these individuals while they're in school and carry that beyond. My philosophy is that once you go credit union, Robbie, you'll never go bank. Like, why would you? You want to pay more in fees or have worse rates? I think we generally have been doing a good job once we kind of introduce consumers to the credit union difference, it's a little less likely that they may jump ship to a bank. But the issue is they're often starting at the bank and they're never shifting to us and giving us a shot. So that's the strategy. And I mean, at a macro level, but I've gotten very good at figuring out the secret sauce to effectively penetrating that segment, that community. As an example, when I was at GTE in Florida for about 5 years, within 4 years of instituting that strategy at a number of colleges and universities in that market, we were able to generate 25,000 members to the credit union in just 4 years. We literally had membership drives where I remember my first membership drive, we had 4 or 5 members, and it was a lot of work and it was expensive. And you're bringing tchotchkes there and staff, and to get 4 or 5 members felt a little disappointing. We got iteratively better and better and better each and every time we did it, to the point where I'm not exaggerating. We would have that same membership drive at a university, and we were getting between 400 and 600 members at that one event or multi-day event. And we were doing so well that we actually were breaking the credit union because we didn't know how to process that many members at one time. But I tell you, Robbie, that's the kind of good problem I want to have to solve for, not where are we going to get our member? Like, oh my gosh, we're getting too many. Okay, that's great. So yeah, I think that there's a lot of opportunity for us to actually address these things. This is my favorite strategy, but there's actually a number of other host opportunities. And just as another thought, I mean, a lot of times community colleges, pretty much every community in America has at least a community college. And those are some of my favorite schools to connect with. 92% of the students that go to a community college stay and work in that community. They're typically the backbone of workers. They're the nurses, they're the mechanics, the welders. Like, that tends to be the workforce of the next generation. Imagine if we could just tie ourselves and kind of introduce the credit union to them in that spot, that environment, and make it one where it can be student operated, give them even more experience and exposure into the movement. Like, do I just want to pay more in costs with another provider? I think we just stand a better chance. And again, it's been proven. So that strategy is working for a lot of our credit union partners. And clearly I get a little excited. So I'll calm myself down here.
It's the kind of excitement we're looking for. So I'll ask you this question, and it'll give you time to pick up that mic you just dropped. But if a credit union wanted to take one meaningful action the next 90 days to address member aging, what would you recommend and why?
Well, I want to caution that there really isn't going to be an easy pill to swallow for this issue. I mean, honestly, if it was easy, then credit unions wouldn't be suffering from its effects so broadly. But there is literally a blueprint for how to counter the member aging issue. And many, if not most of it, is tactical and strategic efforts. Will probably take us more than 90 days. But if you're willing to put in the effort, I do think this KPI of monitoring age could be a way to sort of start. If your organization, for example, isn't at least acknowledging or understanding the problem and where you're trending, are you trending up? Are you holding steady? Are you trending younger? Then that could be something you certainly can control and determine in 90 days is, how are we doing? What are we doing? And what should we be doing? What's causing that trend to go in whatever direction it is? What do we think? I mean, every credit union is going to have its differences. Now, many share in those challenges, but there's at least an opportunity to ask that hard set of questions. And if we can do that, I think that that's a really good first step if we're not already doing it.
So as we look to the future, what is SRM's focus on the road ahead?
Being there for our credit union clients to solve the hardest problems in the industry. We can see what best practices are and how to solve them. Luckily, many of these strategies can be useful and effective across the U.S. I think what we want is all of our credit unions to be successful. And I personally want us to be clearly defined on our value proposition and differentiation, so we can essentially have little to no competition. Because we're really just not competing with banks and other credit unions. We're competing with a much, much larger and complex and evolving environment. Fintechs, I mean, there's just a lot going on. Stablecoin's going to be, adding another layer to it. So we really need to get our strategies and differentiation defined and clear and create. There's a great strategy I love around blue ocean strategy where we really create such value proposition that we have no competition in the sort of the red bloody ocean of competition, but we are like free sailing in this wide open blue ocean. It's one of my favorites.
Well, I'm ready. And I feel like just talking to you in this time, if anyone can figure it out, it's you.
Well, thank you. Thank you. I think we have a great team, and I'm honored to continue to be helping the movement in such impactful ways.
So to wrap up the show, we like to have some fun with some rapid fire questions to really let our listeners get to know you better. The questions are rapid, but your answers certainly don't have to be. Do you think you're ready?
Yeah, give me your best.
Okay. So who is someone in your life who is a great leader or was a great leader, and what makes them great?
Well, I had the honor of working for the first Asian American woman ever elected to Congress. Her name was Patsy Mink. She was from Hawaii. She was a literal titan. She wasn't a very large lady, but she could command. And her claim to fame was that she ended up struggling as a woman to sort of advance in a man's world in that era. And so she ended up going through and just grit and determination and smarts. But she ended up creating legislation that's fairly well known called Title IX, which was the equal opportunity for women in sports. But it really was the precursor and translated across sector and industry. It kind of helped break the ceiling for women from an equality perspective. And I had the privilege of working as an intern for her, but very closely. I mean, the congressional office, where it's not a very large team. And she did take me under her wing, and I was very blessed to get that exposure. And I still very fondly remember and try to emulate some of the things I saw from that remarkable woman, kind of against that overwhelming perseverance of the age and the era, kind of help break through to make it better for her community, which obviously was women.
That's amazing. And that certainly sounds like a privilege. So if you're going to splurge a little on something and you want to treat yourself, what's one thing that you might invest in a bit?
Well, I think I'm at that age with experiences with my family. I have two young boys, 8 and 11, and for my wife and I, they are our world, and why we work so hard to provide for them is really for the opportunity for a meaningful life. And so we want to just give them the best experiences possible, I think, as any good parent probably shares.
That's awesome. And I think reflectively now, I can look back and remember when that kind of switch happened in my childhood, where my parents wanted to give us experiences. And those are what stick out the most, certainly not the things that I got.
Yeah, we don't really need another bike. And it's just so nice for all of us to have that. So I love that that's our focus.
For sure. So if you travel for work, which city are you most excited to visit, whether it's for a client visit or going to a conference?
Well, in disclosure, I sort of said this, but I grew up in Hawaii, but it's not Hawaii for the same reasons as most people would think of picking Hawaii for that, like from a vacation perspective. I'm privileged in this role. I actually work for and serve a number of the Hawaii credit unions. And, believe it or not, there are credit unions in Hawaii, and they're doing some great things and helping them go through the journey of figuring out how to differentiate and connect with their members and add value and, relevancy and grow. And so I get to do that with my home state. It feels so right. And I really, really enjoy anytime I can do something with the Hawaii credit unions. So it's Hawaii, but it's not for like going to the beach. That's fun too.
Well,
but
it could be that too.
Yeah, it could be. I'm not going to
be part of it.
Yeah, it could be. It's a secondary benefit.
I like it. So what is one book that you think everyone should read?
Well, I kind of briefly mentioned it. I'd say the Blue Ocean Strategy. I referenced it here just a few minutes ago. I think it frames out the importance of identifying our organization's differentiator, so we really don't have competition anymore. It's helped me to clearly see excellent examples in the credit union movement. Maybe I could even just give a quick example. One of my favorites is a small credit union in New York City. It's not that old. I think it's about 12, 13, 14 years old. It's run by a great CEO. His name's Keith Stone. When they launched that credit union, it's a SEG credit union. It serves the largest police force in the world, the New York Police Department. And what they did was they offered a free benefit to their members that it was called in the line of duty insurance, and it was free, and it was forgiveness up to $800,000 worth of loans that you might have in aggregate with the credit union in the event that you were to, pass away in the line of duty. And so just take a moment to think about that. Here you have a credit union that, again, we all offer the same rates, the same products, the same great service. And here he's offering something very unique to the psyche of police officers and things that might worry them. Like, think about it. Them and their family members, they worry. It's a possibility. It happens to their brothers and sisters in arms that sometimes they get killed in the line of duty. And imagine that feeling of assurance and value and importance by my credit union that they offer this benefit. And the economics were really simple. I mean, he made it work where it was I can't quite remember, but it's about $140 for this insurance type of policy and he only really had to buy that if they had loans that aggregated that high. If they had a loan that was close to that high, it had to be a mortgage. If they got a mortgage to the credit union, they made enough money on that mortgage to pay the $140. So he was happy to do that. And just how meaningful that was to that membership, that to me was the click moment. That's what I'm talking about. That creates blue ocean where you're not really competing with the Chase down the street because you have this product or this, it's not even so much a product, this benefit that you're offering to your members that really sets you apart and makes you less of you don't really have competition because now all the police officers know this is where we go, guys. This is our credit union. Love it.
For sure. Yeah. And as a daughter of a law enforcement officer, I certainly understand that looming fear, which is how I was introduced to credit unions in my life. My dad has always been the member of a credit union. And so, of course, when we were kids, we were too. And that transferred into the rest of my life. So this question, with all that you do, I'll be interested to hear how you answer this. But what is your best hack for creating balance and integration between your work life and your life?
Yeah, I think I ended up stumbling upon this early in my time at BECU it was a level of balance, and I call it the three-legged stool. And I realized I had three sort of legs to this stool. And the first was my wife. We didn't have kids at the time, but we had a social life. We were young, family. And so there was that leg. That was really important to have that strength and that solidness there. And then I realized, okay, I have a second leg, which is I really enjoy it's not a job. It's not even really a career. I feel like it's a calling. It's like this really impactful work that I'm doing. But I also noticed I had a third leg. And if I didn't have that third leg, I felt imbalanced. I wasn't as stable. I wasn't, not stable, but I wasn't as fulfilled. And it was sort of the volunteerism, giving back. And I served on a number of foundation boards and community boards and represented, honestly, it was a derivative of working at the credit union as sort of the representative, but just being involved, Rotary and just being involved. And I realized it obviously filled up my time and calendar, and it was hard. It isn't easy, but that three-legged stool, I've always realized that I'm best balanced when I've had kind of a level of equilibrium between the three. And honestly, it just feels so great to give back and do well in, frankly, all of those categories that works for me. That's my hack.
I completely understand that. And I really like that approach and finding what balance means to you and not just to what it seems like to everybody else. So we'll be sure to link to everything we talked about in the show notes for today. But my last question for you is, do you have any final thoughts that you'd like to share or asks of our listeners?
So I love what credit unions stand for. I think we continue to provide relevancy and value to communities and our members. And we make it difficult and it's not to say that there's something bad with for-profits or other business classes, but we are kind of a little bit unique in financial services like in totality. And I just want us to do the best we can, because if the best we can do raises the bar for everyone else to have to be better themselves. And so if we stop being good and great or just being mediocre, we all suffer. As it's like the rising tide lifts all boats. And I want us to be that. And so that's good. I think it's admirable. I think we can do it. And so I just want to encourage credit unions to be the best they can and to not give up. And I know there's a lot of trending right now around consolidations, but that's not necessarily the answer. I think it's, again, being cognizant of what we're doing to stay relevant, being able to organically grow. So I just want to encourage us to do the good fight. Let's make a difference. Don't give up, and let's do it.
I love that, Cisco. Thank you again so much for being on the show. Stay well, and thanks to all of our listeners today for tuning in to the CUInsight Network. I invite you all to follow along. If you like this show or want to hear more like it, please feel free to subscribe at CUInsight.com, and we will be back again next time.